All right, folks, here we are on Trading Up. We've got Feriano in the house all the way over there in LA. He's a full-time futures trader, has been for the past 5 years. We're going to find out how he got there and what his secrets to success were. So welcome to the show, Feriano.
Thank you very much. I appreciate the introduction.
Well, look, to start off with, do you want to give us your background, how you got into trading, and we'll try and find out how you got to where you are now.
Definitely. I want to say first, prior to getting into trading, originally I was a cybersecurity specialist. I worked with the government for about 3 to 4 years prior to really starting to dive into trading. And in the beginning, it was very tough trying to figure out what would be my strategy. But I was originally trading structure. I was originally actually trading a structure-based type strategy, so support resistance, so break and retest, trend line, you name it, channel. And if you remember back in 2021, 2022, the market was running up like crazy with gold and a few other indices as well. And during that period of time, that's really when I got hooked to trading because all I was doing was simply buying gold when price would pull back into a channel. And then I would essentially just make money over and over and over. So I got a little bit of a beginner's luck. And actually, very, very early on, I also joined a prop firm, Smart Money Trader. I remember, I think it was 2021 or maybe mid 2022. I had about maybe $20,000 in payout pending on that firm. Kid you not, I blew it. And that's really what put me on the path of okay, I need to set, because I had lost a lot of money from saving that I put into trading and so on and so forth. So that was a little bit how I started, but I had always had an analytical mind due to the fact that I had a background with IT. But that was a little bit of my beginning and how I kind of got into trading. What really hooked me and got me to stick to trading.
Right. And so when you say you blew it, how did you blow the 20K?
Oh my gosh. I mean, this is a funny story. I'm glad that you asked that. So I was trading the account and then I had a simple strategy back then. It was simply a trend channel strategy utilizing gold. And whenever price would pull back, I would go on the 4-hour time frame and I would identify a trend channel. I'll look for price to pull back into that trend support and simply keep buying. And since gold was extremely bullish, it was very easy to make money. So with that evaluation of funded account, I built my account all the way up to 20 to 30, I think $28,000. The unique thing about Smart Prop Trader, which made it so easy to blow it, is that they have a daily breach, right? So it didn't matter if you still had money into the account. If you breached the daily loss limit, you blew the account. So I had already 30,000. All I had to do was sit on my hand, wait for the next week, chill, relax, and then I would get the payout. And you know what? I had a friend. He remembered back then. I had a friend. I took them out to dinner. I was like, oh my gosh, we're gonna get a payout. Life's gonna change, and I'm paying for my 2 friends' dinner, and then we're having fun and everything else. That night, I come back home and I say, you know what? Maybe I'm no better than the market. Maybe I can, keep pushing and making a little bit more grade kicking in, and discipline. So therefore, I placed a position on that night. I don't know what happened. It was the news or something that happened in Asia, but the market moved way faster than anticipated. Cut about maybe 3 to 4,000. There was still, relatively good amount of money on the account, but the daily max loss or whatever that was a daily rule got breached.
Yeah.
Although I still had 23,000, that account was gone. I messaged customer service, I was delusional. I messaged customer service. I said, please, you don't understand. I didn't do that. I didn't, but it was gone. But that's essentially how I blew it.
Oh, damn. So when you got to the point where you'd consider yourself consistently profitable, can you talk us through the steps that got you there?
Yes.
Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450K in funding. The best part, you keep 100% of your first $15K in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.
So after I blew that account, 2-3 months prior to that, the friend that I took to lunch, actually, or to dinner, he began diving into ICT. But at that point, I wasn't really receptive to that because I had made some payout here and there. I had made some money on my live account utilizing that previous strategy. So I was not really receptive. When that event happened, that's really what opened my mind to more. And that really taught me that, okay, maybe I don't have a strategy that's really adaptable to all type of market condition. I really need to keep my mind on my option open. So he started talking again about ICT, and I said, okay, let me go ahead and dive into ICT. And I went into a rabbit hole. I mean, it was a lot, but there was one person that I did a session with that really helped me hone in onto what to focus on, told me that I need to focus on high time frame, that the market is run by liquidity. And I've really started learning a little bit more of the intricacy of what really runs the market. The market just don't move based on support and resistance. There's more beyond that. So it took me maybe about 2 to 3 months before I really began getting more profit from accounts again and testing the water and seeing how things will go. And I think maybe after 3 to 4 months, right about August 2022, I think, or 2020, no, 20, August 2023 or 22, yeah, 22. That's when I started trading again on evaluation. I began trading there, and then I started seeing a little bit more. I mean, I was at break even for quite some time, maybe for like a month or two, but I could cash and tell when the move would happen on the 1 minute or the 5 minutes. I started having more and more confidence. But it wasn't up until January of that following year that I saw myself just go leaps and beyond, because I joined a group on Twitter. And for me, I always understood this one concept is that if I'm by myself, if I'm just trying to figure things out on my own, it was going to be very, very hard for me to find the right information. But if I find the right environment and the right groups, I can definitely build and learn from people that are already successful. So I found someone named Georgie and Zusi Trade, which were two people that were in a different group on Twitter. So I messaged them. I watched their trade day to day. I joined their group, learned from them, and I learned about market maker model. I learned more complex, concept, and that's really helped me modify and improve my system the way it is right now, and which I call the Arcane model. So when that happened, that's when I started getting payout for like 15,000, like the one that I sent you before from Top Step every 2 3 weeks, and other firms as well. And I just saw major leaps and beyond, major leaps from that point on. But I would say that was the turning point from when I was struggling and trying to figure out what I needed to do, what strategy to implement, that I really saw what I was going to be doing for the next 4 to 5, forever in this trading industry.
And so if you had to sort of advise like an aspiring trader in terms of how to get where you got to, what would your advice be to them now?
The way that I developed my model was based on three major principle or concept. I would say the first thing to focus on is going to be the timing, right? You need to figure out what timing or what window to precisely trade, because if you're trading all day long, you're most likely not going to catch the best move of the market. So for me, I would recommend traders, especially the one that are trading in New York session, to focus on the first 2 to 3 hours of the open. So precisely between 9:30 and 12:22. The reason why is because that's when you get the most amount of volatility and you get repetition. So if you come every single day and you look at that specific, those specific 2 to 3 hour window, you're going to find repetition of move that happen, and you can build and find patterns inside of that 2 to 3 hour. However, if you're trading 6 hours in a day, let's say you're trading from 9 all the way to the close of the market, you cannot really find repetition because the volatility happens in the first 2 to 3 hours of the open. So if you're trading beyond that, first of all, you're burning your mental capital, watching the chart all day long, and then you're not giving yourself room to be able to develop an edge that can be repeated over and over and over. The other window that I also recommend for London trader could be 3 to 5 a.m., in the morning. So that would be for Eastern time, maybe London trader, people that want to wake up a bit earlier. In that window, you can also find volatile window, because on days when there's no news, for example, lots of time when the higher the low of the day gets set, you can sometimes see the major move that actually helps set that low or set that high happen in that London session. For example, today the market did not really move the way that people expected it, during the New York session, because most of the confirmation had already happened in London. That's just an example. So that would be number one. Number two, I would say you need to focus on trading the highest probability move the market will always offer. And this is no different than, like, let's say if if you're selling collection shoes or collectible card, anybody that's in the market, even if you go out there and you're selling an iPhone or you're selling some type of product, you buy low and then you sell high, meaning that you need to buy in discount and then sell in premium. And when you're trying to convert that into trading, it means that you need to trade continuation, right? If you're in a market and you're trying to trade reverse, or you're trying to cash at the top of the market. We have known story of people that always burn their account, that always burn themselves trying to cash the top of the market and trying to call the top consistently. You always lose money. So you need to identify what is a high probability continuation move that your model will present and focus on that.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
So if, as you're learning and as you're trying to figure out maybe which influencer or maybe which strategy that's out there to follow, ask yourself, is that strategy actually a continuation model? Is that actually aligning with some type of move where price is simply pulling back and you're trading the continuation back to the top of that range? Because let's say, for example, a shoes come out, the Jordan Arcane, just for the fun of it, right? And then they cost $250, but we know those shoes going to go to $500, $1,000. But for some period of time, before it gets to 500, it pulls back to 380. You will see that as a discount and you look to buy it. Why would you try to sell it when it's at $500? It does not make any sense. So that's the second principle I would say. And the last principle I would highly recommend, and this is very much a little bit more complex, is you need to develop a reasoning for price to actually continue when you identify that continuation, and you need to have a confirmation entry that's extremely powerful. For me, it is a unicorn breaker, right? Different trader across different, type of concept that they trade have different name for it. Some people call it V-shaped recovery. Some people call it high probability market structure shift. In ICC, they call it, high probability unicorn breaker. That's how I like to call it. And I have a unique way of obviously identifying it, which is very, very objective. So meaning that when price pull back and it pull back to an area of interest where I'm looking to trade back to the top of the market range, I want to see price form that unicorn breaker in my timing window as the concept number one, and then deliver to that target. If I don't see that confirmation, I don't really have a conviction into the fact that price will actually be moving in my direction and continuously moving, for that continuation. And last one is you need to have a reason for continuation. If you don't have any reason as to why price need to return back to the top of that range, then why should it continue? So for me, one of the major things that's very, very important for the reason for continuing is measure psychological level. So I trade NQ and YM. Measure psychological level, a level like for not level that ends with 2 zeros, like very, very clear psych level. So for example, 19,400, 19,000 zeros, like it has 30, 24,000, 24,100. Those level, when I was developing my strategy and developing my model, I've realized that those levels are extremely powerful. High and low of the day. If you go onto the NQ chart, you simply look at the NQ chart, high and low of the day. You will notice very, very quickly that high and low of the day continuously get formed around those levels, continuously over the last 10, 15 years. So meaning that if price fails to reach for those levels, for me, that's my continuation reason, meaning that it has failed to reach that level. So now if there's a fair value gap or key level that has been set prior to price failing to reach that, now I have a reason for price continuing that direction. So I'm not just randomly trading continuation because there's so many continuation that happen in a day, but you need to find one that's high probability enough so you don't find yourself taking too many setups that are not high probability enough for you to be able to make money in the market. So for a new trader, that would be the framework I would recommend for them to follow in order for them to really build and optimize their model and find success ultimately.
And how many trades a day would you actually take if you're looking for high probability setups?
For me, I used to trade only NQ. I used to die and live by that. And over a period of a week, I would find maybe one in a really good week, maybe 3 setup. On a low end, maybe 1. And then per month, I would say maybe 6 to 8 maximum per month. So it will be about less than half. But what I did over time, I tried to expand the number of pairs that I'm utilizing or instrument that I'm trading. And I realized that I could actually implement my strategy on YM and on CL oil, essentially. So I was able to take my strategy and adapt it to those 2 other pair. But beyond that, there's no other pair because I try to adapt it on like other instruments such as gold and a bunch of other things. But it worked best only with those 3 pairs. Now that I have those 3 pairs that I trade with, I would say per week, I'll get anywhere between on the low end now, 2 to 4 trade on average. So it gave me the ability to maybe cash between 10 to like 14 trade per month, which is For my psychology, it's way better. When I was trading NQ before, it was not as good because it was high probability entry. But if I catch a small losing streak, which can happen, although I have a very high win rate, like an 85% win rate, it would really mess up my psychology and cause me to maybe go out of direction for a little period of time. But now that I have enough entry, I don't have abundance mindset. I know that if I get one or two set up for that whole week, the following week may give me 3 or 4. So I know by the end of the month, I'll have maybe give or take 12 to 14 on the high end, on the low end, 9 to 10, which is more than enough for me.
And how do you manage it around like prop accounts and personal accounts?
So live account is something that I'm still working on scaling, adding more and more risk, because as I scale, for example, early this year, I'm trying to really increase my risk to like 2,000-3,000 per trade. And I couldn't handle the psychology of that yet. So I scaled back down to like $500 to $1,500 per trade. That's kind of like where I'm at right now. And I try to also mix in between trading prop firm account, because with a prop firm account, I can risk $300, but I know it won't have as much impact on my psychology because it's diversified across multiple accounts. So it has been mainly based on like how to maintain my psychology, because my goal, I have a community that I show exactly what I do, and I try to make sure I'm transparent. So I have those emotions like most profitable trader will have, like real emotion. If you're trying to raise the amount of money that you're trading, you're going to feel the emotion at times. So for me, I'm scaling to that level where I'm trying to risk more and more on my live account. But the way I'm managing it right now, maybe 1 month I manage prop firm account, and then the next month I manage live account. I kind of alternate it like that. So if I've done really well in the live account, I try to keep it going and see if I can scale slowly into risking more and more. I had a streak where I gone 2-3 months. I think early this year, February, I did about 20,000. That was one of my best months. March, I tried to scale. I think I took a loss of like 2-3K the first week and a half, and then I had switched back to prop firm, and I finished the month essentially at 6,000-7,000. But that was some of the things that I'm still learning to manage with, like scaling past certain level. But I know once I break through that, that's what will allow me to break from 6-figure to multiple 6-figure and 7-figure. So that's a little bit of transparency in regards to like how my psychology is currently going as I'm learning about myself and going through this journey.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide. And what's your biggest 6-figure year then?
My biggest 6-figure was 112,000, give or take. That was last year, actually. Yeah.
Okay. And did you do anything different, or was it just the market was playing in your favor?
I really did not do much different. I would say the biggest thing, I switched on TradingView, there's an option where you can switch the money, like when the trade fluctuates,
Yeah.
right? I think, to be honest, that's probably what I did different. To be honest, now that you mentioned it, that I think about it, that was probably what I did different. I switched like beginning of the year, like the second or the third month. For some reason, every time I would look at a dollar sign, it would really mess up my head, because I'll end up maybe breaching my rule and enter a second trade, and some of my losing day will end up being bigger than what I would like it to be. So I just made that switch because I heard an influencer mention that before, that they switched the ticker on their fluctuating profit P&L from showing the dollar to showing now the tick, the number of tick fluctuating. When I made that change, I don't think I breached my rule. I think I probably breached I can count on one hand probably how many times I breached my rule within a few month period. So I would say that's probably one of the things that changed that year, when I had that major leap, when I went from like 70, 80 to like 110.
It's interesting that you say that, because I literally yesterday I saw that on a TradingView chart screenshot, and I was like, oh, you can actually change that. All right, I might actually do that. And now listening to you, I'm thinking it's something I should do. So it's a great little tip there for folks. So yeah, this is getting rid of the money. I mean, I've done it on MT4 before, or MT5. I think it was MT4 back in the day, where I got rid of the P&L, and it was just showing the pips and stuff. So it is a good little tip. Now, you talked earlier on about people going for reversals and possibly even getting into the move that's already happened. I mean, seems to be like quite a newbie kind of way of, like, the market sucks you into this thing. Oh, the move's already happened. I'm going to take the reversal. The move's already happened. I better get in it. Yeah. Can you talk us through sort of your view on like why people get sucked into that and how to like overcome it if they do?
Yeah, that's actually a great question because, I tell this to some of the people I have mentored in the past is that in the very, very beginning, I was asking someone, can you tell me what is a continuation on a chart for you? And I kid you not, they couldn't define. So most of the time, if someone cannot define, first of all, what is a continuation on a chart, 80 to 90% of the time, you're trading a reversal for your setup. That's like number one. I think that's one of the reasons why most people like trade reversal without even knowing because they don't even know what a continuation look like.
Mm.
So I would say that's like probably like the number one thing to do is figure out exactly what over, and then that's going to be tied to the reasoning for price going to another level. So, for example, to avoid getting into those scenario, and I think maybe why people do that, I would say primarily because obviously grade and lack of understanding of why the market does what it does. For me, I understand my belief of why the market moves is primarily because of liquidity, and it is trying to obviously reach for key level or key objective consistently every single day. So if you can take away the chart visualization on the chart, if you can remove that, right? Imagine there is no candle on the chart and you only see the tick on the side, the x-axis and the y-axis. You will start to realize that the visualization of the candle is what's influencing new trader to actually make bad decision. If all they saw was simply level where previous day high and low close, where what was the actual price level for 15-minute candle open, what was the actual price level and the time when that happened, because back in the day, older, like they used to use rice, right? The very
Yeah.
first candlestick was rice. That's what they used to use to trade. And when you think about that, there was no fluctuation that happened at millisecond that makes your heart beat, and now you want to jump into the market. And that really messed with your psychology. And a lot of the traders that backtest on demo and go into the live market, that's why it really messed them up because the backtest data or the backtest candle move extremely slow. It's like on vacation. But when you go into the live market, it's like, wait a minute, we're back to work. It's like 9 to 5 again. It's like
Yeah.
too many palpitation on your heart. So I think that's probably why most of the newbies make that mistake of, even though they know not what not to do, they take those reversal. And a lot of the time they may take it, they may not even realize they're taking it because they don't know the difference between what is a continuation and a reversal, in my personal opinion.
I think it is one of the biggest problems that like most new traders face is just getting away from that. Like I've missed the move, and well, what have I got? I've got two options: get in late or take the reversal. Great
Yeah.
answer though. I love the vacation work thing. That's brilliant. So, is there anything you're like? You seem to have it sussed right, but are you working on stuff constantly or looking to improve anything going forward?
For me, it's simply my checklist and consistently how can I improve my psychology and like I understand that for you to get from maybe 50,000, go from 50,000 to 100,000 in trading, there's not much different that you need to change, to be honest. To go from 100,000 to a million in trading, which is my next goal right now, there's a few things that you need to change, but it's not that crazy, in my personal opinion, from people that I'm listening to and people that are mentoring me right now. One of the biggest things that I realized you need to figure out once you have your system or once you have your strategy and you have objective rule around that, psychology becomes so much more easier. Psychology becomes so much more easier. I used to have this misconception that, oh, you need to work on psychology, then it will improve your trading, plan and everything else in between. My strategy is very objective. A lot of ICT traders that you will encounter will tell you that you need to have a pre-market bias, you need to have a pre-market analysis. And I don't have a pre-market analysis. I come in the market at 9 a.m., 9:10. I mark out those key levels that I mentioned and I wait for it to fail to be grabbed. I look for internal fair value gap and I trade towards that. That's it. It's not that complex. Now I have other rules in terms of the minimum RR that I need to look for price to deliver for me to engage, but I have an immediate bias based on that happening essentially between 9:30 and 12:22. So I don't really complicate too much. Like my system is very, very objective. Even my unicorn breaker, it is very objective in the way that I define it. But the thing that I'm working on right now, for the most part, is how can I continuously build system around me to respect my rules, to make sure that my psychology is on point, to make sure that if I have any day that I do something that's out of normal, how can I replace and fix that? Like I've really journaled a lot heavily, and I focus on documenting and trying to stay accountable to other people, other peers that I have in my private network. That's really what I'm consciously working on improving because my trading system is already optimized. Like all that I need to focus on is just repeat the process and focus on enhancing the process. As long as I focus on that, the result by itself will come, eventually. So, and another thing, I'm not thinking about the outcome. Every single day, I just literally enjoy coming into the market, looking for the opportunity, looking for my right setup. And if it's a loss, great. I document it. I have the same enjoyment and everything else, and I keep it moving. The last thing that I will mention in regards to also something that maybe other trader can definitely take value in is that if you really want to build like a really good system around growing and developing as a trader, the strategy is not even the first place to start, to be honest. I truly believe it's structure in your life. See, when I started, I always tell people I was working a job, like you need to have structure. And this is funny because I talk about this a lot in my and community of people that I help, is that if you look at people that are highly successful, six-figure earner, seven-figure earner, like highly high performers, one thing that I see in common is that they're married. Now, this is not an advertisement for people to go out there and get married. Don't get me wrong.
Yeah.
No advertisement here. The only reason I'm mentioning this is because those people are successful, are able to become successful at that level. It's not because of marriage, it's because of structure. It's because of accountability. Most people believe that, once I become successful, once I reach a certain level of success, then that will help me have the structure around me to be disciplined, to maintain a certain level of activity, when in reality, that's the actual opposite. You need to have partnership that keeps you accountable. You need to have a structure that makes sure that you cannot get away from the little tasks that you need to do. And if you wake up in the morning and then there's nobody looking at you like, you're not going to take a shower. But if you're married, if you're in a relationship, well, you can't do that. You're going to have to wake up and actually go take a shower, do all the stuff. And then there's little things that keeps you accountable when you're in a partnership, whether that's a group of friends that you found that are trading, and then you want to maybe move in together, do something, and then you all keep each other accountable. You're on the same wavelength, or even someone starting a business. That's why a lot of the company that get invested in a company that have co-founder, because they understand the power of partnership. Partnership is what helps having the right structure if the other person have the right mindset. Because obviously, if you have the wrong partner, obviously that can be detrimental. But that's what I mean when I say structure, because that's what's going to help you have all those little habits that you do the right thing around. So once you come to trading, you're going to have an easier time respecting your rule. You're going to have an easier time maintaining journaling. You're going to have an easier time maintaining, the right habits that should keep you on track and on path to developing and, becoming eventually a six-figure and seven-figure earner, down the line, if that's what your model entails.
That's interesting. So get the structure of your life right first, and then start trading. Hey, what about mentoring? So you mentioned you had a couple of mentors. I mean, what kind of mentors have you got, and what are they helping you with?
I mentor different people. One of the requirements that I have for them.
Sorry. I mean, like you mentioned you've got some mentors. Is that correct?
Yes.
Yeah.
Yeah.
So I'm after about So those mentors that you've got, what are they, and how do they help you?
There's one. He used to be an institutional trader. I think he worked with SMB Capital. I've not talked to him in a while, but early on last year, he was one of the person that helped me tremendously. It was actually the one that taught me to like really focusing on structure. It was that advice actually came for him. He's married, 40 years, and then he's traded I think he traded with SMB Capital or on the New York Stock Exchange, and he's retired now. He made a lot of money in the early years, and that was one of the person that really made a major impression on me and gave me a lot of great advice that I took. And I met him at a networking event. So we kind of stayed in touch for quite some time, for maybe like 3 to 7 months. After that, once I started getting on the trad and figuring out my own system, I didn't really go back to him as much, but I always refer to him as one of my previous mentor, or kind of like godfather within trading. And I also have obviously now also online mentor, people that I kind of learn from afar. So like Justin Whelan, Zusi Trade, some of the more prominent, online figure that you will see. I'll pick and choose whichever thing that I want to really learn from them. And the only physical person that I had really gained a lot of information that helped me tremendously was the person that I mentioned last year, which really helped me shift my mindset. It helped me really understand, like, you need to have structure. We had an hour conversation actually about that. And my mind was kind of closed because, we listen to people that are much older. What does he know? And by the end of that conversation, my mind was blown. I was like, I'm doing something wrong here. I need to like take note to whatever this guy is saying. So those are the probably like my vicinity, like the mentor in my vicinity, and what I listen to and what I pick
And
from.
what was that person's name? The guy that changed the mind?
Uh, I have not talked to him in a long time. I just know his first name is Tom something. I'm
Okay.
going to look for it and I'm going to say
Yeah.
that. I know his first name was Tom. I can't remember his last name. But I only remember his first name. When I took his contact, Tom, but someone else told me that he's been, in the industry, he made million and he's retired. So that's kind of how I knew it. And I was like, you know what, let me listen to what this guy is saying.
Okay. We'll see if we
But
can find it and hook it up in the show notes for those folks interested. What about you mentioned R before, like, so what would be an R that you would be going for, an R to R?
in terms of R, I typically go for 1 to 2 maximum, usually 1 to 1.5. Minimum RR for me is 0.7. So it's a slightly negative RR, but I'm okay with that because a lot of the time when price is about to fail reaching that level, price can be very close to it and still has enough breathing room to deliver to that target. So a lot of the time, some of my really good RR would be like 0.7 to like 1.1, 1.2. That's like my sweet spot. I know those
Yeah.
trades will move without usually give me a lot of pullback. When it's like 1 to 2, 1 to 1.8, like on the highest spectrum, closer to 1 to 2, those may play around a little bit more before they actually deliver to target. But my average range in terms of my RR, like the minimum is 0.7, and then the highest is 1.2 or 1.1.5, essentially. That's kind of like my average.
So when you finish up a trading session and you're journaling, I mean, how do you do your journaling? Is it just a spreadsheet, or have you got some special software, or how do you do it?
I use Notion. I have a journal, and I can even show you, later on when we do when we break down my strategy. I use Notion. I break down every single key component of my confirmations. I make sure that I document each steps, and at the end of that Notion note gathering, I have a little section where I can type up notes, and I put as much notes as possible. Usually, back in the day, like I used to have another separate like a whole library of journal. Like I used to like input my emotion before, during the session, and after. I think at this stage of my career, I'm doing really well with just that Notion, journal, which capture my trade and make sure not notes that I have for the session and also my emotion and so on and so forth. So one of the notes, for example, talk about the pace of the trade. So slow, medium, fast. I kind of put that in there. There's also another one where I kind of track how fast the trade had taken to deliver. I look at those things very, very intensively when I start putting down my notes, because if a trade was fast, I want to make sure that I can regulate my emotion, maybe bring it back to like even, because I notice like if a trade delivers relatively fast, I kind of get excited a little bit, because I'm like, I didn't get to stay in this trade for like 20, 30, maybe an hour, maybe deliver in 5 to 10 minutes. Because some of my other trade usually can sometimes take like an hour to 2 hours, sometimes to deliver on average, on the high end of the spectrum. But that's typically kind of like what I do when I document and journal my trade, essentially.
And so, are you going to manage these trades? Like, for example, are you going to trail your stop, or are you setting a
Yeah,
take profit and walking away? How do you get
That's
out of these
that's a
things?
great question. Yeah. So I usually have a 2 hour window. So when I place my position, I usually have a 2 hour window for the trade to play out. So I place the entry and then I let it play out. For 2 hours, I am not touching that position until it hit that target that I mentioned prior, or it hit my stop loss. Now, after 2 hours, if it had pullback towards my entry, on the 15-minute time frame, that's what I would look to shift to from the 1 minute. I'll simply need to have price reject off my entry with a 15-minute bullish candle if it's a buy, or 15-minute bearish candle if it's a sell. Once he reject off the entry with a bullish candle on a 15-minute time frame, then I move my stop loss to break even, and then I let it play out. So after 2 hours, if it moves and take my take profit, cool. If it moves and hit my stop loss, I'm done with the day. So it makes it so I'm not sitting on a chart for the entirety, because once I move it back to break even after 2 hours, once I get that rejection of my entry, it should hit my take profit from that point on per my data. If it does not, then it hit break even, and this is just a break even day. And also I don't get to burn my mental capital by sitting there and watching the chart for 5 hours or 4 hours until the market close. I'll literally just go and do something else. I'm like, all right, this is a break even day for me. If it hits CP, great. If it doesn't, most likely break even potentially. And I would say probably about 50 to 60% of the time it will hit CP. and maybe 30 to 40% of the time, you'll hit break even per my data.
Okay, that's interesting. Hey, look, this has been fantastic. What's the best way for folks to find out more about you?
I'm on Instagram with Arcane.trade. That's probably one of the first places to reach out or look for me. I also have a YouTube channel, Feriano Trade, and I also have an insert, and I also have an X page or a Twitter page of Feriano FX. So those are the main three ways to essentially find me. If you want to directly reach out to me and message me, ask me a question, I'll be happy to help, or whether it's to define your model or figure out how to begin your journey.
Brilliant. Well, look, folks, what we'll do is hook up a link to all of those things in his show notes page, which is under the video or in the podcast description. We'll see you down there, hit subscribe, like, and that notifications bell, and we'll see you in the next one. In fact, what we're going to do is we're going to jump on and have a look at a price chart with Ferion here, so you're going to see how he trades.